We've had the most volatile period we can remember in emerging market credit. Thankfully, we've seen some elements of stability over the course of the last couple of months, but we have seen much more stock picking. So certain jurisdictions have been off limits, while investors are really evaluating where they see new value in this marketplace of today. Commodity volatility obviously has been the driving factor, concern over US interest rates, concern over regulation, all combined, have produced a fairly negative backdrop. But the questions investors are concerned about is, for each specific emerging market credit story, what does the future hold in this new environment we have globally? Key to any aspect of the marketplace is your ability to tap into domestic investor demand and bank demand and global liquidity. GCC as a region invariably does very well in terms of domestic demand and is improving in terms of international and global demand for risk. However, more could be done. We firmly believe that this region is really undersold in the global investor community. A more education, more understanding of risk, especially with commodity prices as low as they are now, is imperative and will be longer term very successful for this region to finance itself, both domestically and globally. Every borrower globally has to look at their sources of liquidity, and bond markets and loan markets historically in this region have been most dominant. If anything, loan markets especially very dominant. We are starting to see bond markets become much more relevant, and that will be the case as companies access longer liquidity from the bond markets. In terms of new forms of financing, from our perspective, pretty limited so far, but the key is to have bond market and loan market working in tandem to provide best sources of liquidity to our client base. Historically, the marketplace here has been very strong, domestically and regionally. There's huge levels of liquidity. Recent economic events are changing that picture slowly but surely. The key, however, is to really diversify the global investor base, both in terms of Americas, US and Europe. And we really see the strategy of many of the large sovereigns, the GREs and corporates. They want alternative sources of funding. So I think the domestic bid for product will remain very pronounced, but we do see international investors very keen to engage and they want to buy product from the region, but it's all about education.